Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, the founder and editor of the Daily Gold. And Jordan, what I want to do in this segment is we will look at maybe some of your targets for GDX and even gold. But first, I want to get your opinion on the relationship between gold and GDX, or more broadly, the gold stocks, because there is an argument being made by the gold bulls that with gold trading at the level that it is, still above 1,200, the gold stocks are much more sold out than they should be. And you know what? The gold stocks then are very much due for a bounce. This is, of course, the bullish outlook for the scenario that we're in. But something that you've been looking at is how this relationship works and how the gold stocks might actually be telling us a little bit more about the sector and how, quite frankly, they can move independently of the gold price. Can you break down that argument right now that says the gold stocks are due for a bounce because gold is trading at a relatively higher level than the last time the gold stocks were at this level?
Yes, Corey. Well, I don't think I agree with that just because they're two different markets and there's times when the relationship can change and, one can perform stronger than the other. How the miners perform can be a leading indicator. And remember, the market looks ahead. So if you're looking at how gold stocks are performing right now and you're looking at gold holding above 1,200, the fact that both the Huey and the GDX have broken important support, I know we'll get to that later, but that fact, that's really concerning. And so I think gold holding above 1,200, it doesn't really mean anything for the market because the market looks ahead. And if you're looking ahead right now and you're looking at the technicals on the gold stocks, it's really worrisome. Like there's potential that we could kind of see a waterfall decline over the next couple months. And, that type of move eventually implies that the gold price is probably going to go down. I would just go back and look at 2008, 2013, 2015. And during those years, there were periods when the gold stocks were really falling apart and had these waterfall type declines, and they were happening without any regard for what the gold price was or what it was doing that particular day or week. And I remember late 2012 or early 2013, gold was trading above 1550, that important support level, for quite a while. Yet the miners had just completely fallen apart, and they had broken similar levels well before gold even started to test that 1550 support. And that's also similar to what happened in 2008. Gold did have a big decline, I think, in the summer, but also in September. I remember it had a snapback move. This is 2008. It had a snapback move, I think, back above 900 before it had that final decline into late October. And so there were just periods throughout 2008 where you look at the gold price and then you look at the miners and think, why are the miners trading as if gold is below 800 or going to 700 when the gold price was, trading around 900 or even above 900. So there's many examples where gold stocks, when they have these waterfall declines, they just happen without any regard for what's going on in the gold price. And looking at the technicals of the Huey Gold Bugs Index, for example, and the GDX, I know we'll get into that, but I unfortunately I see the potential for waterfall declines in these markets over the months ahead, and that gold. Look, going back to gold for a second, I mean, I think the support above 1,200 is going to hold, and gold should hold above that level for a couple months at least. But that doesn't necessarily imply that we're going to get this huge rebound in the gold stocks. I mean, it may mean that gold stocks are going to go sideways, but if you look at what happened in 2008, 2013, 2015, that when you factor that in, you need to look at gold stocks separately away from gold, and we can't just assume, oh, well, gold's going to hold above 1,200. The gold stocks are going to be okay. They're going to at least have a rally or hold up here for a little while, because if they are going to have a waterfall decline over the next couple months, then it's not going to matter if gold's at 1,250, 1,220, 1,200, 1,180. The waterfall decline will just happen on its own without regard for where gold is and what it's doing that day or week, because, as I said, we've seen this happen before in the past.
So really one of the concerns I think that the gold bulls should have is that gold doesn't go through any sort of serious appreciation, because in all fairness, if gold, let's say, goes through some nice bounce and goes back up to 1,300 or even back up to 1,350, not that you're calling for that at all, then you would think that that would support the gold stocks at least a little bit, even though the gold stocks don't need to move exponentially more. But it's almost the worrisome fact that if gold just kind of moves in a sideways boring pattern here, then there is a good chance that you would see more liquidation of the gold stocks. Does that kind of sum it up?
Yes, it does. And one reason why I don't think gold is going to have a big rally or get even close to 1,300, I think the best case is maybe it gets to 1,270, is because if you're a gold producer or you're in the jewelry market and you're a seller, anyone who's selling gold and you see gold make a rally back above 1,250 or 1,260, you're going to be locking in that price as fast as you can. I mean, just if you're looking at what's happening on a macro level, and you're looking, well, these people don't necessarily look at what's going on with the gold stocks, but the sentiment in the market has clearly shifted. And if you get this bounce in gold above 1,250, even to 1,270, the people who sell gold, they're going to be locking in those prices really, really fast. I mean, if you were a big gold producer here, I'm not saying they're going to hedge they're going to use a forward sale to hedge their production, but because I know a little bit of that has been happening in recent months. But if you're a gold seller and you see that kind of move, that's just, people are going to be selling into that very quickly, very strongly. So that's why I don't see any chance of gold going back to 1,300. But you're right. Even if that does happen, that doesn't necessarily mean anything for the gold stocks because of the technical predicament that they're in, and because of history that tells us, look, when they're breaking down and they're falling and there's risk of a waterfall decline, it just doesn't matter what the gold price is doing. I mean, they're two different markets, because if you look at the people who own gold, it's probably different from the gold stocks. I mean, a lot of people who own gold, they might own a small position as a hedge. They might not even be gold bugs. They might just hold it because, yeah, we're holding this 5 or 10% position because it's a good hedge, because it's going the other way versus the stock market. You could have a lot of those types of investors and fund managers holding gold, whereas the gold stocks, I mean, that's a much riskier game. That's more speculative, and the people who own the miners, they can't hold through the pain, I guess, as long as those who own gold. I mean, that could be another reason why when we see these precious metals declining and diving towards a bottom eventually, why we see the miners really falling apart and puking first, well before gold does.
That's an interesting comment there, Jordan. First, on the potential hedging from these companies that are having trouble at these current price levels, and also the type of holders in gold and in gold stocks. They are, and a lot of the time, a little bit different, but there are some similarities as well. Let's talk about GDX and look at some of the technical levels that you are looking at, because that 21 level has now given way, and we haven't, let's say, closed the week below that 21 level, but it looks like we're going to put in consecutive daily closes below that level. There's a whole lot of air underneath that level until you get down to about that 2016 low in December, right around 1850, let's say. What do you think? Is that the next stopping point?
Probably. When I'm looking at GDX and GDXJ, and I put out an update yesterday, so ahead of today, it looked like they each had the potential to fall another 10% before we would get a decent rally. I mean, it's possible we could get an okay rally before that point. But looking at GDX, I mean, it's trading at about 2060 as we're speaking. And as you noted, it broke below 21. And I just, I know that GDX is oversold, but if you look at the chart and you look at what happened from April into July, I mean, it had three or four distinct failures at or around its 200-day moving average, and now it's selling off. But if you look at the chart, it's really not that oversold. Like, you can't look at it and think, oh, well, this is going to pop back to like 22 or 23. It's just very difficult to see GDX having a decent rally, and unfortunately, until it trades at a lower level. I mean, GDX has a little support around 20, so it's possible it could stop there. However, Corey, like I just said, and you noted, the strongest support for GDX isn't until that December 2016 low, which is in the mid to upper 18s, and that's about a 10% decline from here. So, I mean, that's the level where, maybe GDX can rally and snap back close to 21. And looking at GDXJ, I mean, that's down more than GDX today. It's trading just above 30, 30.58. I mean, there is some support in the high 29s and around 30, but I don't see a decent bounce in that, or a decent rebound, probably until it tests its December 2016 low, which is, I think, in the mid 27. So that's 10% down for GDX and GDXJ before we get some kind of sustained bounce, in my opinion. Because looking at all these charts, and given the fact that GDX and also the Huey, that they've just broken down below key levels, when you're looking at an oversold bounce, I mean, you're really looking for kind of a waterfall decline. You're looking at a fishing line type of decline where the trend is just almost going straight down for like a couple weeks, and then that it's really oversold in the short term and there's room for it to bounce. I just don't see that much room for the miners. If you look at these charts, I don't see that much room for them to bounce here and now, unless they like I said, unless they drop another 10%. If that happens in the next, say, 2 weeks, then we would have decent room for the miners to bounce, and they would be at those strong support levels, because now GDX and the Huey, they've broken below key support levels. GDX is broken below 21, so they're much more likely to bounce when they're trading at, or very close to these strong support levels. That's why I thought that GDX was going to hold above 21 and bounce for a couple weeks there, because 21 has been a key support level. But the fact that it's broken below it, then you have to look at, okay, where's the next strong support level for this? And it's not until the mid 18s or the upper 18s, which is another 10% decline. So I don't see GDX stopping at 20. I mean, it might stop at 20.00 temporarily, but it's the same picture with the Huey. By the way, the Huey yesterday broke below its December 2016 low at around 163. So the Huey yesterday closed at 160. Today it's trading at 159. So the Huey is basically at a 2.5-year low. I mean, it's lost that December 2016 low. And when I'm looking at a chart here, and, maybe it could, I was thinking maybe it could rally up to 171. That was something I was looking at last weekend. But looking at where it is here and now, the fact that it's just broken below 163, I just don't see how it's going to rally up to 170 now. I think what's more likely is it continues to decline, like with GDX. Maybe you see a 10% decline and then a bounce from there. The Huey, by the way, has broken down from a descending triangle pattern, and that projects down to a target of 146 to 149, and then the next strong support point is really 140. So unfortunately, looking at the charts of the miners, yes, they're oversold and they're due to bounce, but the charts say that it's unlikely we're going to get a decent or sustained bounce until they go to lower levels.
Okay, I totally understand what you're saying there, Jordan, is that sometimes it almost just needs to go down to those levels to get the next bounce, especially after the significant breakdown that we are seeing. Hopefully it is, maybe quick for these investors, because I know for the last month it feels like we've been talking about that whole fact that it's due for a bounce and we still just haven't gotten one. It's been a tough market, but hey, Jordan, you have been actually pretty spot on throughout this whole move down, and that's why I do listen very closely to what you have to say. Unfortunately, it seems like we're in for a little bit more pain in terms of the gold stocks, but hey, 10% more, I guess, from what we've been through, that's not that much in the whole scheme of things. Hopefully we start to get some higher impulse legs sometime soon. Jordan, great chatting with you. Thanks for sharing your outlook with us.